Brexit has negatively affected the British economy. The World Trade Organization has just confirmed it. In its first ever review of the UK's trade policy as an independent member, the WTO paints a bleak picture. When the UK was part of the European Union, it was covered by the EU's regular reviews. This is the first time the WTO has examined the UK on its own, and the findings are clear. Brexit has led to a permanent increase in trade costs for UK businesses. Exporters now face new border checks and requirements compared with EU membership. The impact has been especially severe for small firms. Exports from UK small businesses to the EU fell by about 30% after Brexit, and around 16,400 small firms stopped exporting altogether. Real goods exports in 2024 was 17% below their 2018 level before COVID hit. Let's just pause on those 16,400 firms that stopped exporting. A lot of these were small businesses producing bespoke UK products that sold very well throughout the other 27 countries of the EU. Of course, big companies were just able to absorb these increased costs, though it did reduce profitability and probably caused inflation through higher prices. But the loss of these small businesses, although tiny in aggregate effect, is massive in terms of the 16,000 businesses that had to stop exporting because the cost and formalities became too great. None of this should come as a surprise. Brexit was always going to damage the economy. There was never a serious economic case for leaving the European Union, unless the UK was prepared to follow an ultra-neoliberal path of slashing regulation and shrinking the state. That could, in theory, have delivered higher short-term growth, but at a huge social cost: more poverty, greater inequality, and weaker environmental protection. Some on the hard right, including figures in the Reform Party, would still take that route. But outside of that extreme, the only argument for Brexit that has any credibility is sovereignty. The idea that Westminster politicians making all of the UK's laws matters more than the economic consequences. So yes, Brexit has been economically damaging. It's made trade more difficult and more expensive. But it is important to keep some perspective here. In a recent video, I said that Brexit wasn't the root cause of the UK's economic decline. Some of you questioned this in the comments. The WTO report actually supports that view, I think. It confirms that Britain's subdued trade performance, weak growth, and low productivity all began long before Brexit. The report also highlights that since 2010, UK exports have been almost flat. Growth has averaged just 1.5% a year, and labour productivity has barely moved. The reasons are familiar: low investment, political instability, weak competition, and high energy costs. In other words, the problems that hold Britain back are not new. They're structural, and they go much deeper than Brexit. The WTO's findings paint a picture of an economy that was already fragile, already constrained by years of austerity and neoliberal policy before Brexit added another layer of friction. The real issue is that Britain has been running on the wrong economic model for decades. Even if the UK was still a member of the EU, this would still be the case. But anyone who claims that Brexit hasn't come at an economic cost, never mind an economic benefit, is just plain wrong. And it's good when incontrovertible evidence shows this. If you enjoyed this video, please consider liking and subscribing. I'd really appreciate that. Thanks for watching, and I'll see you next time.